Hey, what's going on, Bulls and Bears? It is Monday, March 20th, 2023. We're back with another dose of economic reality. Thank you for joining me. Every time big financial news starts to hit, anytime the financial crisis starts to show its face, we see a lot of new people join the channel. So to the new people here, thank you very much for joining and subscribing and for coming back here today for this report. And just a quick word about what's going on right now. Just about everybody here on this channel, all the viewers here, of course myself, knew that this was coming, that the banks were not stable, that the banks were not solvent. And this isn't the end. This is just the beginning. Sometimes it takes a while for things to play out. Often people look at my channel and they say, well, you've been saying the same thing for years. Well, no, I haven't been saying the same thing. I've been giving you new news. Every report I have new news. I don't just say this happened in 2018, this happened in 2019. Sometimes we'll look back on what happened previously to compare to what's happening now. And most things that we see are much worse now than before. The debt levels are enormously higher than they were in the 2008 financial crisis. So something's got to give. The U.S. household, the average household, the average median income earner is not going to be able to stay solvent much longer in this environment. And now we're talking about not just us, they, the business news networks are talking about the Fed pivot and how the rates are going to be dropping to help stave off this financial collapse of the banks. Folks, that's not going to stop it. And in fact, it's going to make inflation even worse. And, people just don't have the funds put away in their bank to survive this type of environment. And, I don't mean to use the word survive in a doom and gloom type of way. I'm just saying that the dollars and cents aren't adding up to what the cost of living is going to be, and that's just numbers. It's just math. So it's not meant to be negative or scary or anything like that. It's just when you have a certain amount of income, things cost a lot more than you're making. You are going into debt further and further each month. Most of the population, not everybody. It just can't last forever. Now, when you look at the banks, you think, well, the banks are just going to keep on loaning out money, keep on getting bailouts, loaning out money, keep on getting bailouts. But look who's not getting the assistance. It's the average person. So just because they can prop the banks up and just because they can give a bunch of billionaires, FDIC-backed insurance that they really shouldn't get, doesn't mean that that's going to solve the larger problem for most people, right? So let's get into today's news. I just wanted to give you that kind of overview on where we're at right now. But a lot's happening as usual. A lot of news coming out. Banks taking over other banks, banks rescuing other banks, the Fed rescuing depositors, bank failures, talks of insolvency, bankruptcies, you name it. We're going to get into it. Let's go ahead and start right here. Now, we've been talking lately about bank consolidation, big banks buying out other banks. And here's another one, UBS to buy Credit Suisse. And we're going to really see this pick up here in 2023. We're going to see a lot of regional, small and local banks, a combination of going out of business, getting taken over by regulators, and getting bought up by bigger banks. And, it's going to be 2008 on steroids. Again, everything is much worse. The debt's much higher. Consumer debt, state debt, national debt. It's just out of control. And we're going to see central banks nationalizing more industries. The banking industry basically is already nationalized because you have the Fed coming in and picking winners and losers. We just had Janet Yellen in our last video. We talked about how she had to admit that not all the banks are going to be served as far as their depositors getting their money back. So that's going to cause a huge surge in people with over $250,000 pulling their money out of the regional and small and local community banks and put them into the big mega banks. And so that's going to be more, more banks laying off and getting rid of staff, and it's going to be more consolidation to the already, massive, big five banks. But it's going to be more than that. All right, but here's another story. This is out of Arizona. Car loans are so enormous right now. We've got the biggest percentage of the population with $1,000 a month plus car payments than we've ever seen. Again, something else that's worse than the financial crisis 2008 times. And here's what they're doing in Arizona. Tell me if you think that this sounds like they're preparing for something. Arizona police are going to now be the enforcers for repossessing vehicles that are late on their car loans. This comes out of NBC 12. Miss multiple car payments. Your car may be reported as stolen, and in some cases allow police to repossess the vehicles. Police can be the de facto repo men under a state law if certain conditions are met. And again, this is in Arizona. This is not a new law, but it's resurfacing now with so many people late on their car payments. Here's how it would go down. Police can be the de facto repo men if new state law certain conditions are met. The law states someone must be 90 days plus late on their car payment. Then a dealership must send a certified letter. If the person fails to pay for 30 days after that, they're guilty of, quote, unlawful failure to return a motor vehicle subject to a security interest, unquote. That law contorts into a stolen vehicle. They said during a traffic stop, police will see if a car was reported as stolen, including these late payments, stolen reports, and the officer can impound the car right then if that officer chooses to do that. So pretty interesting that this is resurfacing, and it's no coincidence that it's resurfacing at a time when late car payments and subprimes are already at the all-time highs and have surpassed 2008. But we're going to see overall late car loans break new records this year, 2023. I would bet my money on that. And continues in this article here. The law is supported by car dealerships and lenders who worry about the message, and they're worrying that if you repeal this law, that would send a message that being late on your car payment is okay. Quote, we don't want police to repo either, but we've spent 4 months trying to repo it, and at that point, we think it's a stolen vehicle. That's what one spokesperson said from a lender. All right, pretty interesting. All right, so let's go on to some other news here. And this is out of NPR. We went from record savings to record debt in just 2 years. Isn't it interesting how when all those programs came out in 2020, people thought that those were going to be solutions? Oh, they fixed the problem. Everything's fine now because the health crisis is over. And, they gave people this extra money during 2020, 2021 with the stimulus checks, with the freezing of the loans, with the enhanced unemployment benefits. We threw trillions at corporate America into the stock market, and people thought that was going to be the solution. All we have to do is print money, give it out, and everything's going to be fine. Well, here we are 2 years later, and now that record savings that people had when a lot of people were staying at home and not traveling and not spending and didn't have to make their payments, that record savings has now turned into not only record debt, but also a record plunge in savings. So now it's not just record debt, it's record debt combined with the lowest savings rate of all time. The lowest savings rate of all time. Another thing that's worse than 2008, the financial crisis. People talk about, it's going to be 2008 all over again. It's going to be much worse. Everything looks worse. If something's going to be better than 2008, I haven't found it yet. Everything to me looks like it's going to be worse. Now, one of the things that's really made people complacent and make people stay in denial about the coming financial crisis, which is already here, so it's not coming anymore, it's here, but the coming economic collapse, people always say that, well, we have the world reserve currency, the United States is different, we're the world's richest nation, and we've debunked all those here. We may appear to be the world's richest nation because we can create all this money and hand it out all over the world, but in fact, we're the world's largest debtor nation, and the reserve currency status of the dollar is temporary, and it's not going to last forever. In fact, I don't think it's going to last more than just a couple more years. And I think we're going to go the way of Zimbabwe and some other countries where we're going to see just massive inflation / even hyperinflation. In fact, I've got a Zimbabwe note. Got a Zimbabwe note back here. Let me see. I forget what it is. Okay, this one here is a $10 billion note. $10 billion. But I've got another one. They had to get crazier and crazier as the economic collapse continued. This is a $10 trillion Zimbabwe note. So the pieces of paper that come out of the Central Bank of the United States, are they that much better than, than this piece of paper out of Zimbabwe? Wild times ahead, folks. We are going to see, and we're seeing a lot of these bankers come under scrutiny, come under fire, including Fed Chairman Jerome Powell. We have politician out there, Liz Warren, on the Fed chair. He has failed. Warren said multiple times that Powell had failed at his job amid potentially looming financial crisis in the wake of a collapse of two banks over the past 2 weeks, which has pushed Warren back into the limelight as she continues her calls for tougher bank regulations and an investigation of the Federal Reserve and the entire regulation system. Well, why don't these people just come out and say what's wrong? What's wrong is the fake system of money that we have. You see, if we had a dollar that was pegged to a real commodity, and we're not talking about oil because people say the dollar is pegged to oil. The dollar has been used for oil trade, but that's changing too. A lot of nations are going outside the dollar with the BRICS nations and more nations coming on board all the time, trading outside of the dollar. So we're not talking about that. We're talking about the dollar being backed directly by something on a set ratio. So it used to be you could go in to a bank, turn in your paper money to get gold. That's when it was called convertible. It was convertible. You can convert your paper notes, Fed notes, into gold. That was a true backing of the money by precious metals, in that case, gold. So why don't these people come out, these politicians come out? Why don't they come out and say what the problem is? They're all beating around the bush. They don't want to come to admit, or they don't want to get to the source of the problem, right? Because they're afraid of sounding like, some kook. And the people that stack precious metals, they've sounded to other people like kooks for years. But when you get down to it, when you see what's happening with the banks, the financial system as a whole, these people, including a lot of us here on this channel, are just ones looking at the source of the problem, right? So how do we protect ourselves against this? Well, prepare for a lot more inflation headed down the road. I continue to stack physical silver, and I've made it no secret, I've moved a portion of my 401k now into a precious metals based retirement 401k plan. And people say, well, it's just digits on a screen. No, this is actually physically storing precious metal for the money you have. So it's similar, going back to when the dollar was backed by gold. Your money that you put into 401k can be backed by physical gold. And if you haven't heard my videos recently, I've got a new sponsor that does that. We'll talk about that more in maybe the next video or the video after that. But anyways, that's what's going on, folks. Let's keep an eye on the stock market. We could see another wild Monday coming up here. There's always the Fed backstopping this, so I don't really put much guarantees. I don't put out guarantees that the stock market's going to crash, because there's so much again, fake money, digital money. Click of a mouse, you can keep the stock market propped up. So we'll have to see what happens, folks. Crazy times coming. Stay tuned to this channel. Please subscribe. Come back. Don't miss an update. That way you'll be on top of things. You'll be able to navigate this storm that's actually here. It's at our doorsteps here. So big love, everybody. Keep stacking. Bye for now. Peace.